This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end-of-day video update for S&P E-mini futures day trading and swing trading. So what you see on your screen is the anatomy of a bear trap. Our proprietary automated long-short algorithm sniffed this out, and we're going to come back to this screen in just a minute. But first, let's talk about the day session. Got a couple of screenshots prepared for you, and we'll start with this one. So you had to move up today, and by the way, if you haven't seen any of our videos before, all of the levels on this chart are what I call our Mercury dynamic pivots, and we call these dynamic pivots because we take these and we run the algos before the market opens, actually over 90 minutes before the day session opens. So day session opens 9:30 Eastern time. These algos are run prior to 8 a.m. And what our algorithm does is it analyzes all the key time cycles that the S&P futures run on. And by time cycles, I'm talking about the institutional algorithms that move these markets all over the place in ways that oftentimes don't make sense. There's a method to the madness. It's very algorithmic. It's very precise. There are, give or take, 6 or 7 key time cycles. Everything from very short cycles that are only a handful of minutes to cycles that are over 4 hours long. And starting from the longest time cycle down to the shortest, they're all identical fractals. And what I mean by fractal, imagine you're looking at a microscope with something at just a basic, say, 10 times zoom. And then you look at that same object zoomed in 50 times, 100 times, 200 times. The structure of the time dynamics of these cycles is a perfect fractal. Now, there's only certain ones that do that, because just like in nature, you have the golden ratio, the Fibonacci ratio. If you've ever seen a cross-section of a nautilus shell and you see those circles emanating from the center, and you look at the mathematical ratio, that's the golden ratio. The golden ratio exists. Let me rephrase that. It's not the golden ratio, but a similarly important formula exists in respect to time cycles. And you can find the math from these time cycles all throughout nature. Look up in the sky. There are time cycles that define every heavenly body. There are time cycles that define the elements in the periodic table of elements. Now, that may sound like a bizarre concept, but the same mathematics that govern where objects are in the heavens is the same mathematics that govern the different characteristics of key elements in the periodic table of elements. One of them is Mercury. That's one of the reasons why this is called Mercury signals. But sometimes folks have I don't want to say difficult, but a little bit of an issue trying to grasp that the concept of time, the mathematics of time, exist in all living things. And I don't want to get too far off on a tangent, but if you've watched these videos, you see this day after day. You see these Mercury dynamic pivots that we publish for our subscribers before the market opens. And price moves very mechanically from level to level. Now, the only things on this chart that were not produced before the market opened is this pivot right here. It says afternoon long cycle pivot 2870.94. Now, today in our subscription service, we shorted up here at 2891. Why? There's a couple reasons. One is that you had to move up to this pivot here, which is the tick trend change warning pivot. It came up to it, it didn't break. And also we had one of our proprietary Mercury bands up here. The Mercury bands are a mathematical algorithm that without looking at volume data, the mathematical time price algorithm simply finds areas that are very high volume nodes. Now, there's a reason that you'll never see volume bars on our charts. We don't need it. Our algorithms find that volume, and it looks for that volume based on these particular time cycles. And that's what gets you these Mercury bands, which are very important long cycle pivots. And I've got something very interesting to show you on the ones that we ran tonight. So the pivot levels here that have descriptive names, like tick point of control and tick acceleration pivot and multi-day trend, long cycle, and swing trend pivot, those all come from our dynamic pivots that are produced in the morning over 90 minutes before the market opens. The Mercury bands, those are produced based on the end of day data. We run 2 sets of them, and we're going to look at this in a minute, but this is what I'm talking about. There's a short cycle and a long cycle. Now, even the short cycle is many days. The long cycle just happens to be many more days. In the core of it are these 8 pivots. You've got an upper level, a lower level, and 2 mid-bands. And so that gives you 4 short cycle pivots. It gives you 2 long cycle pivots. Now, this is actually the ones that I produced. These are the ones that were produced based on yesterday afternoon's close. And you had 2 levels right here at 28.50. Now, sometimes you'll get these levels that are close to one another, but very rarely the same exact handle. And what's important about this, but yeah, I'll tell you what, let that be just a little tiny tease. We're going to get back to this in just a minute. And because I don't want to get out of order, I wanted to build on a couple of things in tonight's session. So I'm a one-take kind of guy, so forgive me for messing that up a little bit. But let's get back to the importance. Why did we short 28.91? It's because this afternoon long cycle pivot comes out around 1:15, give or take. I cannot tell you the exact time. It's part of the secret sauce. Today's opening print at 9:30 was, I believe it was a little bit higher than this. Forgive me for not knowing the exact number. But here's the point. Your opening print was right in this area. So around 1:15, when this afternoon long cycle pivot comes out, this time cycle is over 4 hours long. It only comes out 3 times a day. So around 1:15, when this came out, and it printed below the opening print for the day session, what that tells the institutional algos, and if you're a programmer, you know what I'm talking about. When this afternoon long cycle pivot came out, and it was below the opening print of the day session, the algos that were pushing this market up backed off. Because in their mind, fair value at the time was down here below where the opening print was. I think it was 74.84. I don't remember exactly. But in any event, the key point is that it was above where this long cycle pivot is, or more accurately stated, this long cycle pivot printed below the opening print. So you had price trading up here. The algorithm said, you know what, we're not pushing this any higher because this long cycle that they're going to revert to was below where the market opened in the day session. So in algorithmic terms, the way the machines interpreted that is the market was overbought. Fair value this afternoon was down in here. Well, it came right down into it, went a little bit lower, and then we had our low down here just under 70. So we shorted this at 28.91. We got out of it right into the close. So it was a really nice trade, and there were other very nice trades today as well. But let's move on to what happened tonight in Globex. On my Twitter, which is at MC2085, or just search for Mark Anthony or Mercury Time Price Analytics, and you'll find it. But I posted on Twitter shortly into the Globex session. it starts at 6 p.m. Eastern Time, that there was a bear trap coming. Now, how did we know that? What you see on the screen is our automated long-short algorithm. It tells you when to go long, it tells you when to go short. So here, right a little after 3 o'clock, it triggered short around 28.83. Now, we were short higher than that, but this is the automated algo. Automated algo triggers short a little bit after 3 o'clock, and I mentioned our subscribers before the end of the day, and also mentioned it tonight in Globex. Anytime our automated algorithm quickly flips either from long to short or short to long, that second direction, you're going to get a fast move. Now, in terms of time, the algo triggered short, call it around 3:10, I suppose, close enough. And then you had the flip back long very early in Globex, so you've got that hour stoppage between 5 and 6. So in terms of trading time, anything under 2 hours, 2.5 hours in trading time, when the algo flips from either long to short or short to long, that second direction is going to run. Now, why is that? Because the algorithm is designed to find bull traps and bear traps. So you get all these folks leaning the wrong way, and then it flips long. And it has to do with volatility, because you have the momentum algo, which is this cyan line. It stopped going down. It started to go back up. And then we also saw volatility, which are these 2 white dashes that are on each bar. They started compressing. And so even though in terms of price it looks like a lot of volatility, our algorithms measure volatility relative to itself. In other words, yeah, this is volatile, but relative to the volatility that preceded it, volatility was actually contracting, and the momentum algo had stopped going down and turned up. So when these 2 little white dashes crossed back above the upsloping momentum algo, this cyan line, that gives you your long trigger. But the most important point is whenever the algo flips in a short period of time, doesn't matter whether it's long to short or short to long, that second move is going to be a fast move. So when I saw this setting up, I posted on Twitter, and when I posted it on Twitter, it was right into when Globex opened. So ES was trading down here. It actually was right in this level here, about 28.80, 81. And I posted on Twitter, there's a bear trap coming in Globex. Well, this screenshot was from 8:07. And if we look at where it's trading now, you're up over 2,900. Now, let's get into why this would happen. So today is Thursday, May 7th. Tomorrow is the first Friday of the month. Well, actually the second Friday, but last Friday was the first. What happens tomorrow? Monthly non-farm payroll report, right? Everybody knows it's going to be ugly. Now, I'd mentioned the key levels here at 28.50, and these were the ones that applied to Globex last night and today. Whenever you get multiple Mercury bands bunched together, those levels become critically important. Now, the Mercury bands that were produced at the end of the day today were even more bizarre, because when I ran last night's data set after yesterday's day session close, you had these 2 Mercury bands on the same handle. Well, tonight, based on the data that was run at today's close, all 4 of these short cycle Mercury bands are within 2 handles, between 28.47 and 28.49. And you can see that on the chart right here, 28.47, 28.49. Well, yesterday we had 2 overlapping multiple bands at 28.50. Now today we've got all 4, and I didn't even put all 4 of them because you wouldn't even been able to read it. But you literally have 4 of them right here between 47 and 49, 2-handle range. Now, why is this important? Look, the institutional algorithms that the big banks and the big hedge funds have, they know where technical damage exists. If you break this area between 2847 and 2849 tomorrow, you're going to do technical damage and you're going to get something ugly to the downside. So what do they do in Globex? They create, manufacture, whatever word you want to use. I just use the word shenanigans. Shenanigans are employed, and you have a bear trap in Globex the night before a BBE. What's a BBE? A big bad event. Now, why is this happening? Because they want to create as much space as possible between the futures price and this key level that represents major technical damage. And I don't mean that to sound conspiratorial, but here's the thing. Globex open, you get this move down to 2880, and then it takes off. And then it comes down, and then you get this. Look, this kind of move in this is not Aunt Mary and Uncle Bob buying the futures right here. This is the institutions that are buying them here so they can move this thing up. Now, the other reason they do that is real simple. Sometimes they buy them to sell them. They're bidding them up so they can sell at higher prices. And there's times when they sell them to buy them. They sell the market lower so they can buy at lower prices. And that's not conspiratorial. That's the way the game is played. If you're going to trade futures, one of the very first things you need to understand, my friends, is that the game is rigged. This is their casino. You and I just play in it. They get to make the rules. So understand this isn't a fair game. And, for every trade, there's someone on the other side of it. Right now, they're long. And the folks that saw this red bar down and got all bared up, well, they did a reversal and they took your money. That's why this is happening. I also wanted to show you this. Now, Apple was interesting. If you're watching Apple today, I guess there must have been a memo this morning that today's Apple price fix was 303. The darn thing hardly moved from 303 all day long. You'd have a meteor hit the earth, and Apple was trading at 303. Now, while the tech stocks marched merrily higher today, I want to show you something that is more meaningful. Here's JP Morgan. Tuesday high, 94.21. Wednesday low, 89.82. That's what, 4.5%? 4.5% high to low from Tuesday's high to Wednesday's low. Today's high to low is looks like about 2.8, 2.9%. This is telling you that something's wrong. The other thing that's telling you that something's wrong is if you looked at bonds today, you had bond price sharply higher, which means yields are sharply lower. And one of our subscribers this afternoon mentioned that bonds were going parabolic. And I pulled up the chart and I looked at it, and my exact comment was, something just broke in the financial markets. And after the close, what it is the Fed funds futures, I believe for December, are predicting negative yields across the curve in the United States. That is why banks are doing this. All right, the Fed is real close to having things get out of hand. And I don't want to get into this now. This is for another video. But the problem is the euro-dollar market, and I don't mean the euro currency. The term euro-dollar refers to all U.S. dollars that are held in banks outside the United States. That's what a euro-dollar is. There is a euro-dollar shortage. And behind every financial crisis, they'll tell you it's due to this event or that event. Every time it's due to a euro-dollar shortage. And the reason I bring that up is that is the one thing the Fed has absolutely no control over. None. Zero. Now, what the Fed funds futures rate implies, that's more of a macro issue. I mean, that's not something that you take into consideration day to day when you're day trading. But from now to the end of the year, and it doesn't matter who wins the election, the bond market is telling you that something is very, very, very wrong. So if you haven't been to our website, it's mercurysignals.com. And right now we're running a special. These are the lowest rates we've ever offered. They're going up May 15th. Actually, the 16th. The current rates apply to May 15th. Our service is never going to be this inexpensive again. And it's ridiculous what we charge for it even before we lower the price. Now, to let you know how we run our business, we give you a lifetime rate lock. No matter what prices go up to in the future, we will never raise your price. So whatever price you join at, that's your price for as long as you want to stay with us. Yet at the same time, there's no contracts. You can quit anytime you want. We don't even bill you monthly. We bill every 2 weeks. So you're never even locked into a month at a time. So you get billed every 2 weeks. We bill either through PayPal or through our secure website. And, if you come into our service, you try it for a few weeks, you don't like it, no contracts. But let me say emphatically, there is no consumer trading system that does what ours does. And what do you get? Well, you have access to a live chart every day. All you need is a free Zoom account. We give you a code every day. The code's updated every day. And this is just an example of one of the 2 live charts. You'll see in real time our day trade algo, our swing trade algo for the longer term stuff, multi-day stuff. You'll see our proprietary oscillators. And to give you an idea how important these are, this also told you that a bear trap was coming. Now, you can see where this found support today. And all this is right on your screen. There is no software to buy. There's no software to download. There's no long-term commitments. And for the price of approximately a little over 1 E-mini handle a week, that's all it costs. So we hope you'll take a look at our website and try out our service. If you have any questions, you can email me at markanthony@mercurysignals.com. And let me just leave you with this. I'd mentioned this in the video on Tuesday and again last night, and I want to mention this again. We're going through very difficult times in our country and all over the world for that matter. We're literally living quote-unquote history. But I want you to understand that God loves you and He's concerned about you. And He will always be there for you. He will never leave you. He will never forsake you. We're going through tough times. And if you don't have a relationship with the Lord, maybe this is a good time to think about it. So with that, we'll wrap for tonight. We thank you so much for your time. We hope everyone in your house, in your family, and in your circle of friends is healthy. We thank you for watching this video. Most importantly, God bless you. God bless your family, and we hope to see you again soon.